Those who fail to recognize that this time is different could lose everything. And on today's show, I'm going to show you exactly why and what I mean by this tweet over here. It definitely stirred up a whole lot of comments over there. So let's get straight into it. Starting off, of course, most importantly, with the Bitcoin price. Here we have it on the weekly chart, and we failed to get back above the previous week's close, which is coming in at $21,514. Current Bitcoin price is just below that at $21,336. I did see that just before I began with this stream, the price was pushing up right against that previous weekly close, which is the white line over here. And now it is coming back down. And for those of you on the stream until the end, I might have one trading opportunity for you, which I have already preset my orders for, and I'm hoping I can capitalize on that for this trading competition. I need price to go down a little bit more, and believe it or not, it is a bullish play despite what the rest of this show is going to be about. Of course, I'm talking more to those who are in the mid to longer term trades. Short term, there are bullish opportunities. So with that being said, what I have to say about this chart over here on the weekly is that if Bitcoin does manage to reclaim that all-important previous weekly close and get back above that, and this is your wick over here, then we might have an opportunity to play a little bit within a new range, which would be this one over here, between the weekly close and the mid-range, which is coming in around 21,500 all the way up to about 23,000, give or take. But I wouldn't get too bullish going into the mid-range. That would be the area where I'd be looking to close off any of those positions. And otherwise, not too much has changed on this chart. We do have a cross over here, which is going to be inevitable, and that is between the 21 and 200 MA on the lower time frame charts over there. So that is going to be inevitable that this cross will take place. I still wouldn't be surprised if there was some sort of a rally that price could push into this area over here, because this is historically something that has happened with Bitcoin. Is anytime that you get these crosses, price tends to gravitate towards that. However, I do still think that the downside momentum is stronger, and I'm going to show you why. I'm going to show you why in just a few minutes time. But first, I wanted to get into a couple of tweets addressing that tweet about this time is different. So we have this one over here from the Kobesi letter, which says the current situation: number one, stocks are down like the bear market is back. 2, treasury yields are near highs like inflation is 15%. Remember, treasury yields going up is usually not good for crypto. 3, commodities are down like we have deflation. 4, housing market topping like the collapse has just started. 5, sentiment in the S&P 500 is like it's at 5,000 and nothing is adding up, meaning that people are bullish into resistance on the stock market, and it is something that we haven't seen before. It's something a bit different, something a bit confusing. And then here he goes on to say that over the last few weeks, we have seen multiple mortgage lenders begin to collapse. On top of this, mortgage demand is at a 20-year low, and the housing market has topped. Simply put, stocks, and this is very, very important, simply put, stocks cannot bottom when the housing crash is just beginning. We are going to be in for a wild few months, and this is just the beginning of that. So we need to look to the charts and see what the charts are saying to us if they do agree with this sort of sentiment over here. One thing that I can tell you off the top of my head already is that I don't know if I agree that it's going to be a few months. If he means 2 months, by a few months, then possibly, but I don't really foresee much longer than that. I am looking for things to unfold rather quickly and for a dip buying opportunity to finally be presented to us, but we'll get into that in a little bit. So you have a lot of the super longer term bearish people like this. Michael J. Kramer looking at this. He has, I have shown this before, but it's line charts essentially of the stock market crashes from 1937, 2000, 2008, and 2022. And so far, look, you can kind of change the scales on charts, log, auto. You can move things around and you can get a lot of things to line up. So what he's showing is essentially the white line over here is the most important one because that's where we are now. It's 2022. And he's showing that it's following a sort of fractal, almost exactly like those other major crashes that we have had in the past. And I'm gonna show you my thoughts when we get onto my charts around fractals and how you can use them to your benefit and not get caught on the wrong side of a fractal, because I think a lot of people misuse them completely. Justin showing something very similar. Still amazed by how well the current S&P 500 chart is following the 2008 crash. Even this latest drop was right on cue. And look, I don't like to trust, I like to verify, as they say. I took this fractal myself. I couldn't make it work, to be honest with you. I'm not sure what scale he's put his chart on to get this to fit exact, but he is outlining some important things, and that is essentially that you do have a downtrend forming. So that's the most important thing. And like, I wouldn't be taking out, any sort of options plays that you're going to be betting on major downside. Like, this huge crash is coming in with the exact perfect timing of this fractal into March of next year. It's possible, but I think that you're much safer playing things week by week and just looking at the market at the exact chart that you are trading, as opposed to using fractals. Here you have another one from Michael Burry Stock Tracker, and he's showing the VIX 2008 versus today. Get the popcorn ready. And look, in all fairness, this one is pretty close. Don't trust, verify. Did verify. This one is very, very closely matched on the VIX, which is the volatility index for the S&P 500. And I've shown you before, anytime that this starts to spike up like that, stock market tends to go down. Now, very, very quickly, I would also recommend for those of you guys, a little fun fact. If you click on this, on his page here, this is a Michael Burry Stock Tracker. You got one for Nancy Pelosi, Ray Dalio, Warren Buffett, Bill Ackman. Keep an eye on this. It's quite interesting. They put in the top on the bio there what their portfolio holdings are, because these are big guys, right? They have to disclose what they invested in within the stock market. And here you can see with Michael Burry, he's only holding one stock, which is Geo. So he's got 500,000 shares worth 3.3 million. I don't know what his entire portfolio is worth, but I think it's in hundreds of millions. So when you consider someone like this is fully in cash, and he did call the housing crash, I'm sure you've all seen The Big Short. Follow these links over here. I think that they're very valuable to look at. So Charlie Bellio over here, he shows here that the last 8 times that the S&P 500 was down in a calendar year, then the bonds finished the year up, cushioning the blow. And this is a very different story in 2022, because the stocks and bonds are both down over 10%, which again, this is something that we've never seen before. Things are different. The market tends to work in cycles, and yes, it rhymes, but it's not always exactly the same. And you need to be able to identify that, or you risk losing absolutely everything. So look at how these fractals work, guys. Now, this is why I say fractals can be dangerous. If you look at this, you got this is essentially the same chart, right? So you got current price action in the red versus any sort of a historical fractal that happened in the past over here. And you can look at this from both the bullish and the bearish case, and you can overlay things and make them match perfectly. And this is why I say stick to the trend. The trend is your friend until the end of the trend, and that is all you need. If you literally gave the blueprint to a 4th grader of how to trade, which is sticking to trend-based analysis, they'll probably outperform the majority of these major hedge funds. And there's actually even a book about that, where a guy took 2,000, I can't remember the name, I'll have to think of it and post it on Twitter. Let me know in the comments if you do want to know the name of the book, but it's a risk management book. He took over 2,000 hedge fund managers, the top of the top in the UK, and he gave them a certain amount of money, and only a couple of them made money, and the rest of them lost the money in the tumultuous times that they were in. And this is exactly it. Sometimes you need to just keep things completely simple and stick to the trend, because if you look at this and you're using fractals, over here, the bulls would have, they can compare the S&P 500 to 1962, which basically shows that, okay, cool, we've bottomed, that's it, ready to moon again. You can compare to 2015, almost exactly the same fractal there. Looks like we're ready to moon. For the bears, they're comparing to 2008 and 1973, which shows that we're going into some sort of a major recession / depression. Now, looking at what the macroeconomists say, of course, it does appear that way, that the bears do have the edge, but I personally would be very quick to change my bias if things started to shift in the charts, and that's why I use the charts as the ultimate litmus test, and that is what removes all emotion. I think that you should do that too. So looking at the S&P 500 over here, in relation to what those guys were showing, well, this is essentially what you have. Look, I said that's the most important thing, right? Is trend analysis. So you go down, you make a lower high, lower low, lower high over here, has pretty much been confirmed after yesterday. So yesterday was a brutal close. However, this could change, and I'd be willing to change my bias if this starts to open up. And if it takes out this high over here, I would say, okay, cool. Maybe there's going to be a bit more continuation to this level. Unfortunately, when you're in this type of an environment, you start making lower lows and lower highs. The only real way that you can know that the market is turning is when you take out major zones like that, which is going to be a little while to go. So for the time being, you got to stay on the side of caution and protect your capital, because this probably has a higher probability of going down than it does on going up. So looking at the futures market, which may already be open, there you go. You can see it already. Look, as mentioned yesterday, we deviated below the main range, but it is opening slightly green. We'll see what happens. Maybe it pushes up into that horizontal, rejects off there, and then continues down. And this, my narrative is quite heavily based on the stock market over here.
Carl, I want to know the name of the book. Who wrote that book? What's the name?
Oh, I'm going to have to look into the book. So if you guys want to know the name of the book, I'll need to check into that. I'll post it on my Twitter. I have it somewhere in my library. I've got hundreds of books, so I can't remember the exact name. I think it's like something like targeting the edge or something. But I'll put it on my Twitter straight after the show. Link is in the description for my Twitter. So this is essentially giving me my bias for potential short-term upside move. Oftentimes, if the S&P 500 futures opens green, of course, the crypto market tends to follow that. Looking at the NASDAQ, very ugly close yesterday. At least it came straight onto this horizontal, but I would imagine that this is going to do exactly what the S&P 500 does, which is deviate, come back down over there. So VIX over here had a monumental move up yesterday. I mean, over the last couple of days, that from bottom to top ran almost 30%, which is huge. And that's why we've had this major sell-off within the markets. And then one of the most important charts over here, and I want to put on a monthly, is the DXY. So if I put this chart onto, actually, I want to put it on an even high time frame. Let's go as high as a 12-month chart over here. Now, when you look at this chart, and I can expand it a bit, pretend that this was any other time frame, right? A 5-minute chart, 15-minute chart, 30-minute chart. Look, the level that stands out to me most with a massive candle like this is pretty much anywhere within this zone over here, 116 to this zone, which is the key 6-month level, coming in at 119. The DXY is looking enormously bullish, and it's going to take time because this is not a 15-minute or 5-minute chart. So it will probably play out over the next year or so, the rest of this year, maybe a little bit into next year. But I do think, I believe quite strongly that it will most likely tag that 119 level over here, which is going to be very, very brutal for the rest of the risk on asset markets. But with that being said, this gives you the opportunity to dollar cost average in over that kind of time period. You might not buy the exact bottom, but at least you'll get a gradual entry near the bottom. And that is what I'm watching very, very closely. So you have also, speaking of the dollar being super bullish, it's officially that the euro has fallen to 99 cents against the dollar, which is the lowest level since 2002. And if you bring out this chart over here, let's have a look what happened in 2002. Okay, 2000 and where am I? Here we go. 2000. So 2002, the dollar had already topped out and was on its way down, which is very interesting because that means that the euro could suffer even more if the dollar is on an upward move whilst it's lost that parity, right? Okay, moving on. Now, I'm talking more to the midterm time frame traders. Look, I'm still looking for short opportunities, and the trade that I'm going to give you in a few seconds is a long, but that's a long on a short-term trade where I would immediately flip into a short that I'd be looking to hold for a couple of days, possibly even into September as a swing trade. And you can see that everything is still angled down on the 3-day chart, and it's going to look the same on most of these charts. So Ethereum is the same. All momentum oscillators are coming down. I mean, as a trend trader, again, as I mentioned, keep it very, very simple. You can see, right, just lower lows, lower highs, lower lows, confirm lower high. You would expect that this is going to sweep down and just continue. Matic, they all look the same, guys. Every single one of these look the same. Matic kind of stuck within this range here as well. Maybe this one will have a chance to bottom within this zone at about 65, 66 cents. If it loses that, then it's probably going to sweep all the way back down to the lows at 30 cents. So this is what you need to watch carefully. I want to see BNB because this is still one that I am interested in. Looking at BNB, and the reason why I'm so interested in taking a short on BNB, although a lot of YouTubers have been making YouTube videos about BNB outperforming everything, strongest coin ever. And for me, it's very simple. It's this. I'm just looking at this from a pure TA perspective. I'm sure you can all agree with me. That thing absolutely flew. This is fresh air here. There is absolutely no support, which means when this area is properly lost, and you can confirm that loss, it's probably going to come straight back down. It looks heavy, it looks toppy, and any sort of a push, this might have been the ultimate short zone that's over here. Any retest back into that level, I would consider going short on this. So you're kind of looking at this zone over here. Any sort of push back into that underside resistance, and you don't need to be high leverage on this. This thing can really, really fall. So assuming you got it from the top over there and it loses this whole area, maybe it bounces there. This would be the first zone. I'm looking at about 130. That's already a 60% move. 2x leverage, you've done 120%. Very, very low risk on 2x. Your invalidation is just a little bit higher. If it goes all the way down, that's already what, 85%. So you're doing about 160, 170% move. Invalidation simply is a reclaim above this level. If it can reclaim and hold this zone over here, push up, hold, then you cut the short and it can probably go long again. So there is going to be a lot of opportunity, but it requires patience. You need to be patient and wait for the perfect entry. And look, I forcefully took some trades in this trading competition. I've made some mistakes, so probably not doing as well as I usually would if I took the patient approach. But that's okay. It's a learning curve. It's a learning lesson that you should never ever force trades. I think Cheds is the one that said this, and he put it as one of the quotes in his books. He said that something along the lines of, if you are not begging your friend or family to take a particular trade, then you probably shouldn't either. It should be so obvious that you could explain to everybody why they should be going long or short on this trade with such high conviction that you'd be willing to tell your family or friends to take it. Okay, anyway, with that being said, just very quickly wanted to point out as well with the OKX, if you do want to get access into the Discord, we have private Discord. All you need to do is sign up using actually any one of the affiliate links. It doesn't matter which one, but OKX has a mystery box where you can gain some awesome prizes within there. Then consider using that. The link for the Discord is over here. And then very, very important, it will take about 24 hours to get approval into that. Okay, another one. This time is different. Trader J, look at this. You can see that pretty much it's bear flag after bear flag after bear flag, and every single one is broken down, and kind of we in a similar zone right now to each of these other previous times, which is why your big positions should probably not be positioned long, in my personal opinion, not financial advice. All right, looking at this chart here, daily, I'm expecting if we do have some sort of a push up, it would be a push into the 34 EMA, which is coming in at about $22,700, and then most likely rejection off that level, and then expecting further downside. I do have this zone on the 27th of August marked out as an important date. I think that, if I'm not mistaken, is Friday, and we know that's on your economic calendar. If you go and have a look at Forex calendar over there, you'll get all the insights of everything important that's coming up. And we do have things going on with the Fed, and that will be an important day and maybe the catalyst. So what I personally would like to see, I would love it if price could actually push up slowly and grind into this zone over here. And then I could take short positions from there with high confidence, knowing that Friday is most likely the catalyst that could get us the next leg down. So a little bit, okay, still daily time frame. We have mentioned this one before as well. You can see that now it's fully turned red on the guppy indicator, and soon we're going to have expansion of that level. 4-hour chart, pretty much same, not too much has happened. Here you have the area that I outlined as a potential buy zone previously. I'm going to give another buy zone now because if you have missed that area, you're obviously still going to be wanting to look to get back in. But this chart, I'm still expecting a possible sweep of these lows, but I wouldn't be a buyer of that anymore. So I'm probably going to delete this. I don't want you to listen to that anymore. You're either in the trade now going long and then looking for short positions within the liquidity zones above. This chart will probably show it better. Let's have a look at this one over here. Okay, this is the trade setup that I have. So it's a potential long opportunity on Bitcoin, but I do want to forewarn you already that if you look at the horizontal, which is coming in at 20,779, you can see this has been an important area. It has been knocked into once, twice, 3 times, and any sort of a bid that you catch over here is going to be the 4th knock of that area. Now, remember that the more times that you hit a certain area of support, the more likely it is to break, but you have an easy invalidation. Your invalidation is just below all of those previous ones over here, which so the setup is this. You're looking to enter this trade. I have my order set at 20,915. I set 50% of my position over there. I've left the other 50% off the table. And that 50%, if I do go into the red, I'm going to enter right on that line at $20,779. Stop loss is coming in at 20,612. And either I get the trade or I don't. I'm not going to front run this. I'm not going to buy it up here, still expecting it gets to the top. I would probably be looking to take 50% profit into this diagonal line over here, which you can also see it is forming a bit of a range. So you got the bottom of the range, and then this would kind of be near the top of the range. So I would probably take 50% profit at 21,803. If it breaks and clears through that, I'm expecting a push all the way up here into this liquid zone over here, which is the horizontal box. It's coming in at $22,760. I have posted this already in the Discord trades group. Again, the link is in the description below. And that would be where I take my final profit and literally immediately flip short. It would look something like this. Okay, let's grab this. I would be looking to flip pretty much immediately short over here, something like that, and I'd be shorting it probably much lower. This would be a big position. I'd be looking to take out, remember, I'd be looking to take out the wicks over here and probably targeting this zone in around $19,000. That is essentially what I'm seeing. If I miss the long opportunity, that's fine. Once it gets into this zone, I'm flipping short pretty much straight away. So guys, I think that pretty much brings us to the end. One more thing, Pentoshi, very good trader. He also outlined this over here. He said things that look safe, but they really aren't. And that's essentially the zone that I'm also looking at to potentially take along, which is why I have such a tight stop loss. If you get stopped out on that, I mean, it's a minimal move, right? Let's see. So you're probably going to be entered fully by this point over here. So you're looking at what, like a 1% move into your stop zone. So guys, I think that pretty much brings us to the end. If you enjoy these short videos, please make sure that you give this video a like, hit the subscribe button, hit the bell notification so you can be notified of any other time that we do go live. And then again, to gain access to the Discord, use any one of these links over here. If you are using the OKX link, use your mobile number to join, because then they know that you're not a bot, and apparently you do get better rewards on that. So with that being said, I will see you all on tomorrow's video. Trade safely, trade well, and I look forward to seeing you all. Thanks to each and every one of you. Cheers for now.